Big day, Rick. Um, you're a pro. Are you flat into the Fed?
I am pretty much flat. You know, I have some position trading on. Let me see, because something is frozen on my screen here.
Okay. So you're kind of like me. You can't relax unless you have something to worry about.
No, I'm pretty much relaxed, Dale. You know, I've closed my short-term positions.
Yeah.
And I'm only on bigger time positions, and but on small sizes, you know.
Okay.
I think
I'm open for 2030, 2050 S&Ps to lay into it. You know, Alien showed a nice chart earlier today that showed 2030 being possible. I know it's hard to guess, but what are you thinking the Fed is going to do? Do you have it's just a guess, I know. I know you're Nostra Dinger. It probably doesn't matter to you, but do you have a guess and a bias at all on what might happen here today?
Well, you know that I'm most guy who has a telescopic view, and in times like this I like to see the macro view, and I don't bother if what's happening in the next days. You know, the main issue here is that the Fed will rise rates, maybe today, maybe in October, maybe in December, but in the end it will raise rates, and the markets surely will prepare for that. And after a long run of risk on in the last couple of years, you know that there will be some fights around the key levels. And the main issue here is where are we now in the risk on, risk off long-term view. And I don't know if you see.
Yeah, so you use pound kiwi. You use pound kiwi as a kind of a indicator for risk on, risk off. You were making a comment yesterday that two pairs were saying the same thing when they should be saying opposite things. I forgot what it was. It was pound kiwi.
Yeah,
what was the other pair?
It's more Aussie kiwi, Aussie yen, and pound kiwi. Right. Yes. Well, inverted correlation to risk are pound kiwi and pound Aussie. You know, because if we are in a risk off environment, kiwi and pound should not benefit on that. Although they are on lower levels, but as I mentioned a month before, the Aussie broke a significant level at 72. It's a monthly level, and we are below that level. And until it's a monthly break, and at currently we are touching this strong further support. Now it's resistance, but if we can get above this 72-40 area, that's key. Very bearish for the Aussie. So
yeah, so it's still a rally to sell because you're working on a monthly candle and it's only mid-month. So anticipating a negative monthly close, rallying back to the breakdown. Wasn't the breakdown right around 72, and we're trading right even a little bit above the breakdown, so it's not a breakdown until we know how the month finishes, right?
Well, it broke below the month trend line because it touched 69.
That's so
right. So we are this month we are below this trend line, but if you look, I don't. Let me. Are you seeing my screen or
I'm not, but Mauricio says everyone else is, so that's all that matters. Correct, Mauricio?
Okay. I don't know why my screens are frozen.
They are? Okay.
Uh,
Why don't you stop screen sharing and then do it again? Stop and then start the screen share again. Try that. Or because you've been trading so hot, you're being hacked
yeah.
by the Chinese and Russian traders.
Let me.
They know that besides great bullfighters and basketball players, there are great traders from Argentina.
Yeah.
You and Valeria Bednarik. There, now I see your chart. Beautiful. Working for me now.
Working for you now.
Looking at the
Okay.
guppy.
Yeah, we're looking at the guppy. Okay. Let me see. This is the monthly euro chart. You know, this is the basic trend line from 84 when it was converted to the bank system. And as I mentioned in LAR, you remember when we touched the 105 level, yeah? So
yeah,
currently,
like a year ago, and it was 6 months ago. So
yeah, so we got this trend line and we finally touched them. So when you look at this bigger picture, we are in a consolidation phase. Where can this consolidation phase end? For now, we are in a bear flag channel, and if we go to the weekly, let me see.
yeah, that does look like a flag.
You see the weekly?
Yes, got it.
Okay. Do you see the yellow channel?
Yeah.
Yes.
Yes.
So
we do.
This is a perfect symmetry. You know, when we touch the 17, we touch the upper side of the channel, and we exceeded this. And if we face this blue trend line, we are now at this 30, 113, 114 level, and at today we need to know if we're going to rise to the upper side again, or if we're going to face the support, which is in 110, 109.
Where's
So,
your purple? Where's that purple moving average come in that contained it at 117, Ricardo?
This is
like
a one.
There, that's it. Yeah, 1580.
1580.
Okay.
1580. So, but I think that the key level now is this blue trend line. You know, in the last couple of months or weeks, we stayed below this. Only one day we reached above that, touched the yellow upper side of the channel resistance, and go back again. So the main thing here is to watch this 114 level, 114, 114.50, and the lower side of the range. The same thing happens to the Dixie. In the Dixie, we are currently at in my chart 95.30, and this 95.30, we are exactly 2.6% from the upper side of the resistance, which comes in 97.60, and the support level, which comes in 93.30. So we are exactly at the middle range of this both area. So we can spike higher or lower, and I think that that's why you don't should trade before any news, you know, because the market can turn to either side and don't change nothing. You know what I mean?
Yeah, maybe so the first breakout is a fake out.
Yeah, well,
especially in this environment where we could get a spike that fails in either direction.
Look, what I'm looking to is in the big trend. Where are we? We are in a bear flag, yeah. So yes. In a bear flag, and this is a potential move to parity or below parity in the euro in weeks to come. So I personally use any rally to sell, to build short positions on euro. You know, unless
do you get out of the way over a close above the blue line today? If we penetrate that blue resistance, huh?
If we go to this, because this is key now. I will not trade when the Fed news comes out. I will leave the market to make their direction, and then see. And then look, it's not necessary to trade on the news event, you know, but because you don't know. Exactly. So if you have traded on the 4 weeks ago when the euro spiked to 117, if you were short at 114 and it where were you stop? At 115, 116, it traded to 117 and then retraced all bill. So there was a lot of stop handings, and that's no need to be on that side. You know, I think that you have to manage your risk properly and wait. And if it takes 1 day to wait 1 day. The market will be here every day, but your equity will not. So if we take a wrong direction, and you know, my trading is based on low leverage, and that's because and that's why I also don't I have wide stops. You know, I don't care if I'm on the on the right side of the long-term view. I don't mind if I am 150 or 200 pips away from my entry position.
Okay.
On the wrong side, you know, on the right side. You know,
use less leverage. Thinking about you. Did you like that song?
Well, you know you have to define yourself, because if you are a trader, a day trader, and you make this as a job, you have to have enough equity in your account so you can make a living of it. If you can't, you will take much risk, and that's where you get in trouble. You know.
That's a good point. You know, Rick. People have asked me for years, Dale, could I trade for a living with a $10,000 account? My answer to that is yes, if you want to live beneath an underpass.
Yeah, exactly, and it depends also on your family, and if you're alone or have a family.
Well, you're happy with 30-40% yearly returns, aren't you, Rick?
Yeah, I'm very happy with it.
Okay, because I know hedge fund managers do cartwheels, but I'll guarantee you 80%, 90% of the people hearing us right now think that's lousy, because they read and hear about 3-figure returns, 4-figure returns, and they don't hear about people striking out trying to hit home run balls. So realistic expectations are a very important part of what we're doing here, and a lot of people think they're doing lousy because they're only up 20-30% on the year. But compared to what you get on cash, compared to what you get even during bull markets and equities, you're a star. And I don't think a lot of people know that.
Yeah, well, you know, you have to be. If you are a market trader, you need to be humble. You know. If you're not humble, the market will throw you out.
Will humble you, yes. All right, so that's a look in the euro, and that's probably the key currency. Anything else you're laser focused on? Go ahead.
Well, you know, this is the gap. You know, I followed the Guppy a long time ago, and. Yeah. Well, you see, this is a weekly chart. You see the 180 level that I mentioned it also in LAD. It was a very nice entry point. And if you got this kind of moves, you know, and you make 300 pips about it, it's a month. trade, you know. And so, if you do this for a living and you make 300 pips on a trade like this, and you have enough equity to do that, you have to you can rely on that and say, okay, stop and just watching. But back on this chart, what I'm notice here is that we are facing now the next resistance, which comes in at 190.
Yeah.
You know, 190 here is in the macro view the new resistance line, and in the short term, let me see if I can. I'm too frozen here. Sorry. This is the daily. You know, here 190 again.
Yeah, you're getting confluence on different time frames with different moving averages.
Exactly. You know, and
that's also a fib level of the decline, Rick. Right around 190 is 61.8 back.
61.8.
So that's something else you could throw into the equation.
Exactly. This exactly 618. And in the shorter term view, let me see. You can pull this as an inverted head and shoulder, you know, which 187 as a neckline.
That measures 94.
That measures the highs again, you know, and this is I don't know if this is possible, but you have to take this in account while we in this yellow channel, you know.
Yes.
And one level that was left, and I missed that level, and I expected that we touch that level, is the full retracement of the 61.8 to the 200 level, in the pound level.
That's right. Yeah.
And one thing that came to my attention also is the expectations about pound strength, and what can happen if the Fed finally raise rates. The Bank of England maybe will join sooner than later, and if this is so, pound will show strength too.
So maybe if you could lower your chart, the Guppy chart again, where does that upper yellow line come in around the 200 level?
Yes, exactly.
Okay, that's what. So, and you know what? That would be a third drive up there as well.
Exactly. Let me. This is a third drive. Exactly, the third drive.
Okay.
This is.
Yeah. So 190 is key. We get through that. New highs are possible.
Well, we are all. This is all resistance level. You know, we need to know what will happen with the stocks. We are facing this big resistance at 2000 and in S&P, and if we go over this, let me one second.
Sure. For those of you watching Rick's presentation and his charts, I just want to remind you that we are going to be live for the Fed decision at 1:45 Eastern Time. Val will be with us. Hopefully your internet's up and working in Mauricio, so hang out with us for the Fed today.
So do you see the chart here again? This is
got it.
Well, this is the S&P.
Right.
So this black line, which came in at 80.50, which we touched, was confluence exactly, but we need to touch the yellow line, the yellow trend line, which came in 38 FIP at 78.38. But
where 1730?
Exactly here at in the yellow trend line here.
Yeah, that's 1730, right?
Yeah.
Okay,
yeah.
So basically we had about a 300-point decline from high to low, maybe a little bit more. And if we get to 2030, equality would take us to your trend line.
Yeah. what I notice here is this huge divergence, and this
Yeah.
that we are in a bear move now at the current level. So I expect that we can touch this 2050 level in S&P, the retest of the trend line.
Tinker was calling for that a few weeks ago.
Yeah, and you know, there's also a lot of confluence. We had the last lows, 250. We had the big blue trend line, which is key again. We had moving average, both moving average who came down 21. This is the weekly, so
okay.
I paid much attention to the 55 and the 21, which came out also in 2050, 2070. So I expect that. If we touch these levels, we will see some selling pressure again. But you know, we have to wait. This came to my attention. This pullback from this support level was very strong. So if the Fed didn't hike today, and we will have a delay on that, and this will come to October. It will depend on the wording of the Feds today too. But again, we need to focus on the long term, what we expect, you know. And at this point, we are in a confluence of 250 and around to 750. So this is the big range today. And if we go to dollar to the Dixie, let me show you Dixie.
You know, I was looking for 97 that you brought up, that 97.5 level. Okay, wow, that's a nice looking chart. There's a lot of work on that. That looks like a descending triangle.
Yeah, this is the Dixie. You know, we are exactly here, and we got 2.4% to the bottom of the support line, and we got 2.6% to the resistance level.
Where's until that coming? And that yellow line is 97.5 or higher?
97.80.
Okay, thank you.
97.80. Right. Yes.
Yeah, nice look.
We also can draw a line here, and we can make a bear flag, you know.
Yeah, that would take it into the 90 area.
Yeah, and when you look, I was looking at this. What happened with the euro when we touched these levels? This was in March when the euro comes to 105. This level, the high. Yeah. Right. This line here, this 93 was in May when the euro touched 114.
Yeah.
This level was in August when the euro touched 117.
Yeah.
So what this is telling you is that the dollar has more strength related to the euro, because 93 with euro 114 and 93 with euro 117.
No, that's showing that the euro has more strength than the dollar.
Yeah, right. in this rally, you know.
Okay.
In this rally.
Yeah.
So and when we go to the gold view, the gold view is showing you that unless we can go above this 1165, 1170, we're still in this bear channel, and this is the support I mentioned before is 170. It is a weekly, yeah.
Yeah.
1070.
Okay.
And we are stuck in these ranges. You know, we have to wait. And
key word. We have to be patient today.
Yeah, and keep in mind the long-term view too, because that's what I trade. You know, looking at the long-term view. If you don't look to the long-term view, you can fail a lot. Let me see something here on some currency I want to show you. 1 second.
the Singapore dollar, the Swedish krona, the Polish zloty. You ever trade the zloty shekel here?
No, I don't.
I don't know anyone that does. I figured if anyone did, it would be you. How many pairs do you cover, Rick?
I will say 20, 25.
I can't keep up with you. I don't know how you do it.
Yeah, this is the Aussie yen that I'm also looking at to risk on, risk off.
Okay, and so we're coming back to the breakdown at the 89.
Yes, the first break was this 86, you know.
Mm-hmm.
This 86, and but we broke this huge trend line. This is back to financial crisis, you know.
Yeah.
And so I keep in mind that this big trend line was broken. So the rallies will be contained. 86 first level. Next level is 90.
Got you. What a great presentation, man. You gave me some levels to pay attention to, and it actually confirmed some of my thinking. And really appreciate your contributions to our community for almost a couple years now. Rick, has it been almost 2 years we've known each other?
2 years. 2 years, yeah. 2 years.
Okay. Well, I want to thank you, buddy. I wish you good hunting after the Fed, and thank you for stepping up and pinch hitting for Val today. Great presentation. Lots of ideas and levels for people to pay attention to. You are a Top Gun, Ricardo Dinger. Do not fade Ricardo. That's my advice. So,
okay, then.
Thanks again.
Pleasure to help.
All right, and I hope to see you around for the Fed if you're going to still be around.
Yeah, I will be around.
Okay, see you later, partner.
Okay.
Thank you, Ricardo.
See you guys.
Everyone, thank Ricardo for a great presentation. He broke out the telescope for everyone. And with that, I think I'm going to wrap it up because I'm going to be back here in about 2 hours and 45 minutes.